Deposit. It's definitely one of the most talked about parts of the home buying process and the years it can take to save up that deposit for your home too.
In this video, we'll take a look at how much deposit you need in order to purchase that property. So let's get into it.
If you're buying a home on the open market, the minimum deposit that you need is 5%. Now, when you're putting down 5% deposit, it does reduce the amount of lenders that are available to you because not all lenders do lend with a 5% deposit. Also, when you're only putting down a 5% deposit, it may mean that the interest rate that you pay on the mortgage is higher than if you've got a bigger deposit to put down. Also, the lower deposit that you put down, the higher risk that you present to the bank. And the reason why that is if you had problems with your mortgage payments and you was unable to pay your mortgage back and the property needed to evict you out of the property, there is a lower chance of that lender getting all of their money back, and therefore they see you as a higher risk. And risk means a higher interest rate.
Not all lenders in the UK will lend to you if you've only got 5% deposit. You are limiting the pool of lending options available to you. If there are issues with your current circumstances, for example, you may have an element of adverse credit, they may require you to put down a larger deposit in order to obtain a mortgage for that property. It's very, very important that you do speak to a broker in this instance to make sure you're getting the right advice going forwards in order for you to purchase that property. The best way to review your credit profile is by getting a copy of your credit report. Would recommend getting a copy of your Checkmark file credit report because it compares 3 different credit reports on one page.
So there are a number of other mortgage schemes available, and different schemes require different contributions when it comes to deposit. And what we'll do now is look at those relevant schemes.
There are a number of equity loan schemes available both for first-time buyers and next-time home movers. This could be, for example, Help to Buy. With Help to Buy, you would get a 5% deposit contribution as an interest-free loan for the first 5 years. Help to Buy is only available until the end of 2022. However, don't worry, lenders are now bringing out other equity loan schemes available for first-time buyers and next-time home movers.
So we've had a recent subscriber ask the question, how much deposit do they need for a shared ownership mortgage?
Typically, you would require a 5% deposit when purchasing under the shared ownership scheme. However, depending on the complexity, you may require an extra 10% deposit or 15%. The good news is, historically, however, depending on the market conditions, lenders actually have had products available where you don't actually require to put down any deposit based on the share purchase. Do you need a deposit if you're purchasing under the Right to Buy scheme?
So the Right to Buy scheme is where you're purchasing the property from the local authority. And typically what the local authority do is when you've been in the property for a certain amount of years, will give you a discount on the property value. So let's say, for example, you've been in the property for 5 years, they may give you a 30% discount, which means you're buying the property for 70% of what that property value is. Now, when the lender does the mortgage application, they will use that 30% as a deposit and therefore won't require you to put any further monies in yourself. That can vary from some lenders, and if you do have bad credit in the background, some lenders may require you to put in a further deposit, but most lenders will work without you having to contribute any monies at all. So how much deposit do you need when you're looking at purchasing a buy-to-let property?
Now, it varies on the market conditions. Typically speaking, you can get away with putting down a 15% deposit. However, if there's no products available, because some lenders do pull products normally with a 15% deposit, you may need to put down a 20% deposit. Be cautious, however, the smaller the deposit you are putting down, potentially the higher the interest rate available to you. To get the better rates in the market, you may need to put down a 25% deposit in order to purchase that buy-to-let property. Does a deposit need to come from your own savings?
So savings is definitely one way which can contribute towards your deposit. However, there are other options available. So the first option that's available for you is a gift from a family member. Now, a lender class as a family member, normally someone that's directly related to you. So that could be, for example, your mum, your dad, your sister, or your brother. Some lenders will also include aunties and uncles, and even some lenders further will include your cousins. Some lenders will also accept a gift from a friend. Now, that not every lender on the market will accept that, but some lenders will. The final part is some lenders will also accept a loan as a deposit. Now, you do have to be cautious when you are taking out a loan as a deposit, because that loan commitment can affect the overall amount that you can afford to borrow. So just be cautious and speak to a mortgage broker before you do that. So as you can see, there are a number of deposit options available for you when you are looking to obtain a mortgage.
Please check out our other video around shared ownership.